Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the market during the day and look forward to how we can plan for a better trade the next day. So we had a market that went suddenly hit by the resistance and went down. Right? It was kind of a speed trigger and probably it is an expiry play as well. Let's see what exactly happens, and we'll be analyzing it for February 4th, Friday 2022. So as usual, this is pre-market analysis for Friday, the next day, February 4th, and we'll be looking at all of these chart patterns that you see on the left side, and we would traditionally have data analysis based on the parameters that you see on the right side, and we'll also wrap up with some actionables. So look at this bearish candle. This is wide range bearish, right? Similar to the Bank Nifty. What you saw on the left side is Nifty, and here Bank Nifty, it's also a bearish, very bearish candle, but it's a inside bar. It's well within the previous green candle, so that's inside bar does not nullifies a little bit of bearishness. You can say it may be consolidating in the very short term, but here this is a concern. This is, this is clearly hit resistance, solid resistance up there at the 7800 level that we talked about, and then came down. So intraday, this is what happened, right? We was strengtheningly going down on the Nifty, but at the Bank Nifty, it tried to stay flat a little bit, and then it fell big in the afternoon after 12:30. After that, it was big fall. Let's see what exactly happened, right? So Nifty lost 220 points today, right? And it closed closed below the 20 moving average and the 100 EMA also. And Nifty also gave up 320 points, when it fell off. The big sell-off happened later afternoon, and it also found a inside bar bearish candle. We are seeing that in the price action. We are seeing that, right? It was trending downside. So Bollinger Bands is the same. What it is indicating yesterday, it's a high volatile Nifty, because of the width of the bands from the median, right? So, and the high volatile is because of that, and then sideways is because of the band going straight and not up. Well, Nifty, there is a skews contraction on the upside, which is indicating bullishness. Skews means less volatile. Less volatile bullishness is Bank Nifty, more volatile and sideways in Nifty is what Vauld balancing. And making out of the support and the resistance levels. The resistance above is 17800, 850 obviously, where it got hit and then came down. And the resistance above that is 18,000, above that is 1800, 18200, 18400, and 18600, like that, right? Downside, it's it's a support at 7500, 7600. Fibonacci 23 support is what it has taken now, and if that falls from there, it is 7350, 7400, and if that from there, it is 7200 or 7300, and then 78,000 rounding level. That's support resistance on the Nifty. While making out of the support resistance levels for the Bank Nifty right side, 38,900, 39,100. That range is where it is taken. It's kind of a resistance. You can't say it's a support. Then the resistance upside would be 39,500 range, then above that 40,000, 40,200 range, and then 41,400 range. So downside, the supports would mean 38,500 the first zone, and then 38,000, then 37,700, 800, and then below that 37,300, 37,400, which is the Fibonacci 23. That's support resistances levels for Bank Nifty. Moving on to the momentum and divergence. Momentum, Nifty is lacking momentum clearly. That's why it's you can see that it is below the 60 and resistance. In today it faced resistance and then gave up. While Bank Nifty, you see that it's clearly bullish in the bullish zones, and it is now taken a bend today. Momentum has dipped a bit, but that dip could be one more dip is happening, means potentially that is a range shift, which is even more powerful. It is taking the support and then bouncing up. It's even more powerful momentum indication, right? But otherwise, sideways on Nifty, and bullishness continues on the Bank Nifty. Medium term, both Nifty and Bank Nifty are sideways. That's about movements. No other divergences are seen as of now. Trend indications is yesterday Nifty had moved to the DMI positive, but today is again DMI negative. Crisscross, a crossover to bull zones, now again crossover to bear zones. Now Bank Nifty is in bear zones, as well as the ADX is super one-day switch. But Bank Nifty remains in the bullish zones, but the strength is reducing. Here also, the bearishness strength is not that great. So very short term, not strong trended, but it's bearish and bullish on Nifty and Bank Nifty respectively. That's the trend ADX, and now it's volatility. Small spike of 3% might happen in 19. It's 19. It closed at that level below the 20, which is okay. And implied volatility is 18.6. Implied volatility percentile is 69.6. It cooled off a lot. Now 1521 range was broken up and it hit the 24 kind of levels ahead of the US crash in the budget, but it has now cooled off in the 2050 range, back to the old range. As long as it maintains that range, it should be fine. But if it is going above, you have to keep the caution. Now coming to the open interest analysis, this analysis may not be much relevant because it's a new expiry that's going to get traded actually from tomorrow only. So it's for February 10th, 2022, but just for reference sake, I'm just putting that details. I may not give you too much of clues. So the highest put rating for the February 10th, 2022 expiry weekly is at 17,000, then 70,500. So similarly, 18,000 has got the highest call rate, and then 80,500 has got also call rating. And the put call ratio is 0.62, which is not bullish, neither bearish. And futures open interest showing a short bit of that happened today. Nifty. So the range is pretty 17,000 and 18,000 is what people as of now assume sellers, but things will be clear from tomorrow. 7,000 point range for the first day of an expiry. BANKNIFTY 38,000 is where the highest put rating is. 39,000 also has got sufficient. So range is small. Look at that, 38 and 40,000, 2,000 points. Not big in BANKNIFTY. 40,000 is highest call rating, and 39,500 also has got good call rating. So all this call rating places will be resistance zones, and all this put rating highest put rating areas will be supports. And correlate these levels with the map, whatever support resistance level based on Fibonacci and the trend line marking. Correlate with them and then take your positions and then stop losses and all those things. The 0.71 is also not very bullish or not bearish either. And open interest later today have open interest futures open interest. This part is the options open interest and futures open interest. It's again a short belief just like Nifty and the BANKNIFTY also today. Look at the red all over. Big selling happened in the IT because of the US fall yesterday, and none of the big heavyweights like HDFC, Reliance, ICICI, Kodak, all of these did not do well. So only sector that did somewhat well was automobile and a little bit on the fertilizers. So it was all bearish, all red in all sectors you can see. Sector-wise, major sectors if you see, IT fell 2% down. Mostly it was except IT, all the others were all kind of flat closing. Metal flat close, auto close flat, pharma flat close, and FMCG also flat. Reality dipped a little bit, 1.74%. Reality and IT fell, right? Real estate and IT fall, and all the momentums are sideways in the short term. So just have to wait for the top-down approach until the momentum is catched up to the bullish zones. Institutional selling today's data is not available, but as of yesterday, very little selling as had happened from the FIS side. Seems like FIS have taken a halt, but today definitely FIS might have sold, is what I would assume. We'll have to wait for the data to come. Dollar index, right side, what you see is dollar index. It has dipped and it has lost in the strength, but the USD currency pair still shows strength. So the price is still nearing to the 75 kind of levels. Not good. Crude oil is even worse, and but today there is a cool off that has happened today and yesterday. But even then, it's 86, 87 legs is not good, and seems to be taking the momentum is very bullish. So there is every chance that if this momentum is catching up, and then it can shoot up to 100 levels even. Gold is consolidating in this famous support zone, and after it had failed, another attempted to break out of the channel top, and seems like it is tired even before trying to regain energy for the next attempt. US market, Dow Jones is continuing the bullish trend and is green, and there is absolutely no problem. But Nasdaq, which is tech savvy, was red last 2 days and really showing red in the S&P 500 also. So that's a little worrisome. That might have reflected in the IT stocks now. So we'll have to keep all of these details, all of this US markets and the UK markets. We'll have to track them tomorrow morning pre-market and in the afternoon when the European markets open, right? So then we'll get a clue on how they're doing. But as of now, Dow Jones is okay, but the tech stocks have some issue because of results probably. Actionables, Deepak Fertilizer, weekly chart pattern is what you see here. Good volumes, good trend, and good momentum. Great momentum actually, weekly and daily both. So it's a very long multi-year 2018 or something, right? Multi-year rounding pattern breakout is what happened with the fertilizers sector assets because the China factory is doing good. So this may be a good fix for the positional sales, positional trade, swing trade or swing trades as well, right? JK Paper is giving a breakout of the flag and pole pattern, and momentum is just getting into the bullish zones. The weekly, if it sustains, it should be a good trade. Momentum has crossed over, volumes are great. Trend has crossed over actually, and if this is a weekly chart pattern, daily also is bullish and showing similar strength. So if this strength sustains, and the breakout has already happened, price pattern. So JK Paper and Demat Fertilizers, two picks for the next few days for the swing position. Now, just before wrapping up, you can see that this is exactly what happened. There is a confluence of multiple resistance, of moving averages and Fibonacci that happened here, and we also already mentioned earlier that a green close above. Yesterday was a green close above, but the candle was still half part of the candle was below. So probably a confident close above the 17800 is required for us to say that the rally is continuing. Probably it may take, it may be a pause in the momentum that happened before it regains more energy to further. So markets never go in one straight way up. It goes up, moves down, just like we are taking the breath. Breathe. How we breathe. We take in and then take breathe out, breathe in, breathe out. So it is now probably taking in, breathing in, and then it may further spike up is what it looks like. You never know. But until that green close happens, it's trouble. BANKNIFTY is clearly bullish. It is an inside bar. Probably it is taking some more time consolidating to go moving up. Momentum is also great. We've already seen that. I'm just repeating that chart in a different way. So because of those reasons that we discussed, the mild bullish is the view. Bullishness is because chart patterns are not that negative. Although we had a red candle for just for today. Support resistance levels and looking at momentum trend crossover. Institutional selling is a concern, but apart from that, all of things are fine. Side is what the Bollinger Bands is saying. Nifty, Bank Nifty, Bollinger Bands is saying it's bullish. US markets have taken a, Dow Jones is fine. Clear bounce continuation is happening, but Nasdaq probably that may be a minor glitch, minor dip that happened because of some tech stock results is what we assume. But as long as US markets are not crashing and then maintaining that support level, you should not have much worries. Positive factor is that volatility has cooled off and still today it spiked a little bit, but very little. Still it maintaining below 20. Then momentum is also Bank Nifty showing extreme strength in momentum and trend. That's the main thing. Right? And today's might have been an expiry play that it had to take this dip probably. You never know. But there's some positive factors out there. So now the budget event is over. Or now the next thing is we'll have to identify what is the trend that market is deriving or coming out with following. It may take several weeks or sometimes few days or sometimes the entire February month may be required to know how market digests the budget and its impacts and then comes out with a trend. So positional trades, you have to keep a close watch of that. And the last point is something I repeat: always take risk defined hedge positions. Calendar spreads, vertical spreads, or any of these option strategies like and condor and all that. To protect your capital, to have risk defined ahead, right? And intraday always stop loss. If you're carrying forward, always hedge your risk. That's all I have. Hope it helps you to frame your view for tomorrow. If that helps you in some way, consider hitting the like button and share to your friends and colleagues. Thanks for watching. Happy trading, happy learning. Bye.